Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at profits and losses and how important it is keeping your losses small and letting your profits run. But as usual, we start with our risk disclaimer. I'd remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. That's what we'll be looking at in today's video, and as such there will always be losing trades no matter what trading approach you take. Let's have a look at the NQ yesterday on a 3-minute chart using regular trading hours. That's from 9:30 to 16:15 New York time. Now, MTPredictor is not a black box system. We don't look to take all the trades as if it's a mechanical system. We don't do that because basically half the time markets are random. So in other words, half the time you shouldn't be doing any trading at all on that particular market and time frame. So the question is, how do we then define when the market picture becomes clear? For that, we go to a higher time frame chart. A higher time frame is between 3 and 5 time frames higher. So a 3-minute, you go out to a 15-minute. For say an hourly chart, you go out to the 4-hourly. If you're say trading daily stocks, for example, you'd go out to the weekly. So I just want to use our trading mode and jump back before yesterday even began. So for this, we place our DPs on a higher time frame chart. You can see here is our previous pivot. So we'd right mouse click, do decision point. Can you see how that would have given you an area of resistance on your chart in advance before yesterday even opened, even before the trading session began? So if I exit trading mode, can you see what happened? In that, oops, just extend that out a bit. The market went up and it made actually a couple of attempts at this level, but the main thing is the resistance came in at the anticipated level. So that's what we're looking to define when the picture is clear, in whether the market is doing what you anticipate. In other words, whether it's reacting at your projected levels. So if we now go to the time frame you're trading, in this case is the 3-minute, you can see that initially the market went up into the 15-minute resistance area. Our MTP trend was red or black, i.e. not blue. So you would have actually been considering trade setups. There was a history triangle here that allowed you to analyze this trade. So there was a trade setup here. Now in this particular bar, the market went up, took the high out before then going back down. So in other words, this trade setup would have been invalidated before it would have been triggered. And that's why we allow you to place the analysis on, so you don't just look at our history triangles and assume they're losing trades. You have to place the analysis on and see what happened at the time. So here, this would have gone up, gone through the stop trigger before going through the entry trigger, therefore would have invalidated that particular setup, so there'd be no setup there. There was, however, another setup here. So if I right mouse click over this red cell bar, this would have taken you into a short trade. The market went down just to the 100% initial risk level. If you hadn't have brought your stop to break even, which there was no reason to bring your stop to break even because this was making a reversal at our higher time frame resistance, this would have taken you up and then stopped you out. So this would have been a -1 hour loss. Remember what I said at the start of the video, losses can and will and do unfold no matter what trading approach you take. So you'd have had a -1 hour loss. There was another trade set up here. Can you see this history triangle? So if I right mouse click here, do analysis, this would have then also taken you into a short trade. There would have also been stopped out. So this again would have been another losing trade. But the loss would have been kept small. That's why we use position sizing to vary the number of lots, contracts or shares to keep your initial risk small. In this case, less than 2% of a sample $20,000 account. You can set up different size accounts to then keep your risk small on the account size that you have, but our default is $20,000. So at this point in the day, you'd have had 2 losing trades. It then went up and then made another TS1 sell here. We right mouse click, do analysis. This would have then given you a good trade, a profitable trade down to the first target where the profit would have been plus 4.8R. Can I say nearly 5 for easy maths? So can you see how this profit would have been large, not just in dollars, but in relation to your initial risk? In other words, would have been much bigger than the previous -1 hour losses. So this would have made you profit overall for the day. There was a buy setup here, but you probably wouldn't have considered this because the large skew trend would have been down off this higher time frame support. But before we see whether this would have been a good trade, we have to then go out to the higher time frame. So for this, we then go back out to the 15-minute. We would have then go back and use the training mode so you can just see what was going on here. So here you'd place a DP off this previous low. Again, exactly what we did before, where you have the level on the chart in advance. Can you see that? How it's out there in advance. So let's go back to the shorter time frame chart. I'm just going to turn training mode off there and see what difference that makes. So here you can see how the market was indeed down into that particular level. So that would have been a good trade there. So if we right mouse click over that, do analysis, that would have actually been a losing trade as well. So you can see how losses can and do unfold, but they're kept small at -1R. Let's now go back and have another look at this TS1 sell, because this is what we've been looking at in our customer-only training webinars, in how to try and run your trades a bit further, because that's the key. As you can see, the first thing you need to do is to keep your losses small. So that's what we've been doing here, keeping these inevitable losses small at -1R. So that was a -1R loss there, a -1R loss there, a -1R loss there. So -3R sounds quite bad. However, the other side of the coin is keeping your profits large. So do you remember this profitable trade here? So this was at the first target, a profit of almost 5R. So even at almost 5R, this still would have made you money overall on the day. However, what we've been looking at is looking to use the higher time frame DPs to help manage your trade. So in other words, on this TS1 sell, this would have been your higher time frame resistance. This would have been your higher time frame support. So rather than looking to come out of your trade just here, you could have looked to run this trade into the higher time frame support. So it would have come down to the higher time frame support zone there. But look what a difference that made. That increased this profit from plus 4.8R to just over 12.5 times the initial risk. So suddenly, can you see how this makes a big difference to your bottom line? Is that even though we had a -1R loss, a -1R loss, a -1R loss, this profit at plus 12.5 would have more than made up for that and made you the money over this particular day. So that's the purpose of this particular video, is to show you that no matter what trading approach you take, there always will be losing trades, but the trick is keeping those small. I've deliberately chosen a day here where there are quite a few losing trades. So you would have had 3 losing trades and 1 profitable trade. But can you see what difference it makes by allowing your profits to run? And that's what we can do at MTPredictor, because we have the option of going to our higher time frame support and resistance zones. Remember, these are on the chart in advance. So even when you're right the way back up here, somewhere, right back up here, this level is still on the chart for you. So rather than looking to come out here, you can then look to then manage your trade and project down to the next support zone, which is on your chart in advance, to look to use that to then manage your trade. And as you can see, that would then have produced a very nice trade of plus 12.5R profit. So hopefully this has been a good video to show you about profits and losses in the markets, and how it's not about avoiding losing trades, because you never can. No matter what trading approach you take, there always will be losses, as we've seen in this example, but it's keeping those losses small. So when the losses come through, they're kept small at -1R or 1 risk unit. But when the profits come through, let me click on this one. When the profits come through, they're large, but not just in dollars, but in risk reward units. And then also take the next step of looking to use your higher time frame DPs to then manage your trades, to then allow you to then run the profitable trades even further. That helps increase the R profit on your profitable trades. So hopefully this has been a good video to show you how to keep your losses small and run your profitable trades to maximize your profits using MTPredictor, with an example on a 3-minute chart of the NQ from yesterday.